Remaining bearish in this bull market. We're seeing currently on SP 500, we've got majority bullish at 8 and 6. On the daily, we've got majority bearish on the 1 hour time frame. S&P futures relatively flat right now, but we're seeing that trend actually at neutral, 7 and 7. So we're seeing some weakness certainly at these levels. We are in this upper supply range and could be watching for a test of the 236. Let me get it to grab that location right there around that 5904 area, currently 5980. So potentially another 80 points on S&P 500 to the downside. We're seeing the overall breadth of the market holding right around that 50% range, majority bullish right here as it's holding steady, but we're seeing lots of different areas starting to show some weakness here. We are seeing volatility moving higher here with the VIX moving back to majority bullish pretty aggressively here in the last few days. That is bearish for the market. We're also seeing bonds starting to rise here, moving to majority bullish on the short end of the yield curve, which is SHY, and which is a corresponding, again, this is not exactly, but the corresponding rate on the 2-year is starting to drop. Now, it's a little bit different story with rates dropping now. It's not an inflationary story. It's a recessionary story. So we'll be watching. I believe we have GDP numbers coming out in a couple of days and seeing if we are seeing sliding more than anticipation. We actually are looking. I believe that forecast is 2.3 on GDP versus 3.1. So it's already forecast to be contracting slightly. We'll see if that is better or worse, or more importantly, what the market thinks of the anticipation of that number. Things starting to slide right here. Bonds, again, that 10-year, let me jump to that TLT. The long end of the yield curve is at a neutral trend. 1 hour is majority bullish, so we're seeing bonds, actually a decent gap right here on bonds as well this morning. Again, that means that rates are falling in anticipation. Market is anticipating that the Fed is going to have to lower interest rates now, not to protect against inflation, but to protect against recession. That's that balance. We talked about the inverted yield curve as well. Between the 10 and the 2-year, we want to see that start to climb and starting to move higher. And when we have a inverted yield curve, which is anything below this 0 number right here for any length of time, so really from the 2022 to about 18 months, 12 to 18 months after an inverted yield curve, traditionally we do get a recessionary scenario in the economy. That could be starting to happen here, and markets may be starting to anticipate that also as a potential reality. We also know that we're way extended at the upper end of the range. If we look at the weekly time frame on S&P 500, and we're looking between compression of trend and expansion of trend. This is the weekly time frame, starting to get a little bit of a blip right here with this price activity, and again, the probability of this expanding even more without some kind of a retracement is just quite low right here. So risk of market either trending sideways or some retracement to the downside is elevated at these levels currently. Let me jump back to that daily time frame, and let's jump over to DIA, Dow Jones Industrials. Let me just squeeze that in also just a little bit. Sorry about that. And come back in. We're at neutral, 7 and 7, majority bearish on the 1 hour time frame. It has had a pretty decent slide back into that 434 range. Triple Qs also showing some weakness. Everything, all indices so far, majority bearish on the 1 hour time frame. So relatively early in this downtrend. If we're catching the downtrend, this is some of the early signs that we could find some support if GDP numbers. There could be some other catalysts, but we're seeing some pretty consistent numbers in weakening. We're also seeing the Russell 2000 showing more weakness than the other indices here, and it has been really for the last few months. Majority bearish on the daily and the 1 hour time frame. USO all over the place here recently, but showing some bearishness. The 50% retracement location sitting right at that 75 range. Gold is one to be aware of also. This is another scenario where running into the probability of continued expansion to the upside versus a retracement, the reward to risk for more upside is just not very good on gold. I'd consider a retracement before making decisions on a bullish play for gold. You could get a little bit more push to the upside, but again, it's just the probability of a long-term expansion. We could get an exuberant push higher. Those typically end with an exuberant sell-off as quickly as they go up and down. But gold interesting at these levels for some kind of a retracement. Currently also SOLV in the same boat. Also, if we take a look at a couple of stocks that may be of interest today, one TIGO, bullish confirmation, increasing volume in the last few days, back up into the momentum zone, majority bullish on the 1 hour time frame, and also SOLV, which has got a nice confirmation bar here as of yesterday, some increased volume and majority bullish on the 1 hour time frame. There are a few things that are out there, but again, market conditions, oftentimes be aware that when we get selling with the market as a whole, sometimes it's throw out the baby with the bathwater, and it's just an area to be aware of the risk in the position size, the number of holdings, and stop loss locations for portfolio management. If you don't have access to the filters, you can join us in our Discord server, which is in the description below, and we look forward to having you. That'll do it for today's update. Everyone have a fantastic day today.